Morning, this is Jason Sen at daytradeideas.com. It's Friday the 12th. Just doing this quick video because there's some slightly worrying patterns forming in some of the European stock markets which are worth noting. We're looking at the Eurostoxx future here, continuation chart, and I've drawn, you can see a little run up there from June last year, so we've had a good run for well over a year now. But if I expand this chart out, I'm just going to try and show you this head and shoulders pattern which could be forming here. The red curves show it very clearly. The recent rally, we bottomed out pretty much near the previous low, which was in April. We bottomed out again in June. We've managed to recover almost 61.8% of that recent down move from May, which is usually a good resistance level. We're getting overbought on the daily chart as well. If we do top out around here, which I think there's a good chance that we do, this could be forming a right shoulder here for the head and shoulders pattern. I mean, it's pretty obvious there. The neckline's down at 24.88, so if we do head lower from here, and if we do break the neckline, we are looking at a drop of around, about 350 points or so, 360 points from 24.88. So that's only if we break the neckline. We've got another 350 points to drop. The distance to the neckline is already over 200 points from where we are at the moment. This is the DAX going back to 2011, the DAX future. I'll just open this up now and you start to see this head and shoulders that I'm talking about at the top of the bull run. Slightly lopsided because the left shoulder is lower than the right shoulder, or at least the neckline area is. If I just highlight this, that's the neckline, which at the moment matches quite nicely the 200-day moving average around the 77, 40, 30 area. You can see this trend line here. If I just try and highlight that, we haven't quite made it back up to there, but we have made it to a 61.8% recovery of this sell-off from the middle of May down to the middle of June or late June. We've managed a 61.8% recovery now. Again, that's always a good resistance level. Market getting overbought on the stochastics. So you can see I've put these red curves in to indicate what might be happening. We may well be getting a head and shoulders pattern forming here. And if we do top out below this 82.16 level, then we'll probably head back towards the neckline, which is around the 77.5 area. As I say, quite close to the 200-day moving average. And then if we break lower, we've got something in the region of 900 points on the downside from a break of the neckline at 77.50. So I'll let you do the maths, but that works out something like 6,800 or in that region. Lastly, the FTSE, same sort of thing. Chart you're looking at, daily chart going back to 2011, we've had a good run up. If I open this out, you can see the same idea. Slightly reverse to the DAX one because you've got the right shoulder lower than the left shoulder. But anyway, all adds up to the same thing. It's fairly clear. We've actually gone a little bit further on the FTSE. We managed to beat the 61.8% retracement, which was at 65.15. But yesterday we didn't manage to close above it, and I think they call that a shooting star when we spike higher and then close lower on the day. So that's always a negative sign, or can be a negative sign. And again, my thinking is that we've topped out on this rally in the FTSE. We'll see where we close today on Friday for the weekly close, but stochastics overbought. The evidence is pointing towards a top here for this 2-3 week rally that we've had, and potentially heading lower. 200-day moving average at 61.78, neckline down here at sort of 5,900, 58.80. So we'll have to see what happens there. But all in all, not a very bullish picture unless we do manage to break these highs that we saw on Thursday yesterday, and preferably close above there tonight for a weekly close.